The Federal Reserve just dropped its May inflation forecast and Wall Street is reeling. Inflation is worse than expected and markets could take a hit. That's what you need to know now. In May 2026, the Federal Reserve released its latest inflation forecast, revealing an increase that caught Wall Street off guard. Contrary to expectations of easing inflation, the report showed that inflation pressures remain elevated. This signals that the cost of goods and services may continue climbing, challenging the Federal Reserve's plans to stabilize prices. Investors reacted swiftly, with stock markets dropping in response to fears that higher inflation could lead to more aggressive interest rate hikes from the Fed. The immediate fallout from the May inflation forecast was a sharp drop in major stock indexes. Wall Street fears that sustained inflation will force the Federal Reserve to maintain or even increase interest rates longer than anticipated. Higher rates typically raise borrowing costs for companies and consumers alike, potentially slowing economic growth. This negative sentiment triggered sell-offs, particularly in technology and growth stocks, which are most sensitive to interest rate changes. Because inflation remains stubbornly high, the Federal Reserve may be compelled to keep interest rates elevated to rein in price increases. This means higher borrowing costs for you, whether it's on your mortgage, car loan, or credit cards. For businesses, it can slow expansion plans and hiring, which could impact job growth. The Fed's commitment to controlling inflation could lead to a tougher economic landscape before things improve. For everyday consumers, the rising inflation forecast means you might see higher prices for essentials like food, fuel, and housing. Your paycheck may not stretch as far as before. For investors, the market volatility sparked by this news can create uncertainty and potential losses, especially if portfolios are heavily weighted in sectors sensitive to interest rates. Staying informed and adjusting your financial plans could be critical in navigating this environment. While the short-term outlook looks challenging, the Federal Reserve's goal is to prevent inflation from spiraling out of control. By signaling the need for sustained vigilance, the Fed aims to protect the economy's health in the long run. However, this balancing act means Wall Street and consumers should prepare for continued uncertainty and possible market fluctuations as the Fed adjusts its policies. The Federal Reserve's May inflation forecast is a wake-up call. Higher prices and interest rates could affect your loans, investments, and daily expenses. Staying informed and adjusting your finances now can help you weather the storm. Subscribe for daily updates so you never miss how these big economic moves impact you.